If you are a new trader and just getting started and a beginner to the stock market and trading in general, whether that be day trading or swing trading, I want to talk about something that oftentimes is misrepresented, misunderstood, and that's okay. When you're brand new and you don't quite know what you don't know, it's not that you're stupid for thinking this way. It's not that you're not smart enough. It's just, like I said, when you don't know, you don't know. But I want to talk about what actual risk in the market is all about and how risk works within a practical real world viewpoint of trading. And I emphasize the word practical because what I'm about to talk about and what comes, I don't want to say all the time, but relatively often, is these people aren't wrong from a textbook theoretical standpoint, from just a strictly mathematical point of view, but from the real world of a practical trading and a viable strategy, and assuming you're putting yourself in the right types of situations, then it's apples and oranges. There's a big difference between what's in a textbook and then what's in the reality of, like I said, practical trading. So how does this all work? What is going on here? Well, sometimes I'll do, if you're not aware, I do live trade videos where I record myself doing some actual trading, and I'll get comments that say stuff like this. So to set up the context, let's just say there's a stock and I want to buy, so this is me, and I want to buy 500 shares of that stock, and the stock is $50 per share. So like I said, not to insult anyone's intelligence, but 500 shares times $50 means there is $25,000 into the trade. So 25,000 be the number because again, I wanted to buy 500. Each share costs $50. 500 times 50 gives you 25,000. And there's people, and I probably should have put a couple screenshots down below, but I didn't think to do that. But anyways, people will say, Clay, and let's just say that, I'll make, let's just call it $100 or a couple $100. And they'll say, Clay, I can't believe you risked $25,000 in order to make $100, $200. Even I can't believe you risked $25,000 to make $1,000. And what they're thinking, and like I said, from a theoretical point of view, they're right. Technically speaking, because I had $25,000 into the trade, I mean, that was at risk. I mean, I could have potentially lost $25,000 because that's what I put into the trade. But let's put that aside real quick and let's look at things from a practical point of view. And again, this is assuming that you put yourself and the proper stocks and the proper assets to put yourself into. But if you do it the right way, then unless a freak accident occurs, $25,000 is not at risk. Now, what would a freak accident be? Let's just think of, let's just Facebook, right? So ticker symbol FB, and I don't know what it's trading at right now, but let's just say that Facebook is trading, well, for our example's sake, at $50. What would have to happen in order for me to lose $25,000? I mean, I'll pause. So think about it. In order for me to lose $25,000, what would have to happen to Facebook against priced at $50? Well, Facebook would literally have to go down to a value and being worth, well, nothing, worth $0.00. If that were to occur, then yes, I would lose all $25,000. But from a day trading perspective or from a swing trading perspective, I mean, is that really actually going to happen? Again, theoretically, yes, sure. Some sort of freak accident could come out and Facebook, just like that could drop down to $0. But I mean, if that's the game you're going to play with yourself, then I guess you just have to stay away from the market, because if you're going to always take freak situations like that, well, then it makes no sense for you to, really do anything in life. I mean, you definitely want to cross the street, because what happens if something falls out of the sky, it bumps you on the head, it knocks you out, you lay down on the road, and then you get, right? You can always you can always play the what if, or, well, what if this could happen and make a drastic situation. But in all actuality, it's just a very big misunderstanding of how risk actually works, because no, $25,000 is not at risk. Now, if this is some sort of penny stock and there's barely any volume, then yeah, maybe all $25,000 would be at risk, because remember, you can always buy something, but when it comes time to sell, well, that's a much different story. So if you are looking at some sort of penny stock or some very illiquid, asset, then yeah, that's very important. In fact, down below, I'll put a link to a video I did all about volume, really for this very reason, to make sure that you're not actually putting the $25,000 at risk. And in that video, I called volume the #1 trading indicator, because this is an perfect example of why it is. Because assuming you're factoring in volume and you know what to look for as far as volume is concerned, then again, the chances of Facebook or any big company, Coca-Cola, Pepsi, Amazon, fill in the blank, Verizon, AT&T, that those stocks just drop straight to zero within seconds. So from a day trading standpoint, like I said, referring back to my live trade videos, I mean, if you've ever watched those, I'm in and out of stocks within seconds. Sometimes it's a couple minutes, and a couple minutes is actually a relatively long time. So in order for the $25,000 to be at risk from a day trading standpoint, as far as my strategy is concerned, I mean, that's literally saying, well, Clay, within 2 minutes, Facebook could drop straight down to zero. And that's silly, right? That's not going to happen unless you go down the free creek route. So no, $25,000 is not at risk. Just because somebody puts in, or in my situation, just because I put in $25,000 does not mean that is all, from a practical point of view, actually at risk. So just keep that in mind. And that's one of those things where, like I said, if you never realized that, well, good. We're learning. That's the idea behind this channel. But this is always one of the things that makes me chuckle, and why you do need to be careful, not necessarily just in the YouTube comment section, but just social media in general, because people show up and then, they get up on their soapbox and they start preaching and they start lecturing and, kind of trying to come across like they got it all figured out and they know what they're doing. And then all of a sudden they make this comment and it goes, okay, well, you just revealed that you don't actually know what you're talking about, because if you did, you would understand the difference between a practical risk, which is what this is, and then the theoretical risk. And they're just saying, well, yeah, that's all at risk. I can't believe you did that. And so it's just one of those things that always reveals who knows what they're talking about and who doesn't. But like I said, it's totally cool. I'm not judging you. In fact, I commend you if you just learned something, because that's what I'm trying to do here. And that's the goal, is let's get better. Let's understand what actual risk is in the real world. Not necessarily like day trading, but swing trading or any trading. So make sure you factor in volume. And keep this in mind when it comes to risk and how to actually analyze risk, because you don't want to be saying and thinking that you have some sort of distorted. You don't want to have some sort of distorted view of how this all works. And this would definitely be a distorted representation of it. So hopefully this clears it up. If you enjoyed this video, hit that like button and leave a comment down below. Have you ever seen anybody say this about, not necessarily my trading videos, but anything where they think that because of what you put in, that's actually what's at risk? So have you had any experiences with this? So leave that in the comment section below. Check out the channel as a whole. Hopefully you like what you see. And if you do, subscribe to the channel. Thanks for hanging out. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up, as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.